we have Jim O'Neill joining us, ex-commercial secretary to UK Treasury. Welcome, Jim. Good morning from where you're at. Give us perspective on all that's happening when it comes to European auto. What are you seeing in terms of trends? And I speak this only from a perspective that Renault has given this guidance that they're seeing a bit of a slowdown. What does that mean for the economy as a whole? You have a great perspective, a good pulse on that. So give us that perspective.
So I have absolutely no idea about what's going on in the Euro auto sector, to be honest.
Okay, sure. I just wanted your take on what that means from a European perspective, but I get your point. Okay.
You know, I think there are so many cross currents going on everywhere, and maybe those Renault numbers reflect a modest part of the negative things that have been influencing consumers. But I would argue that the most important thing, which is being picked up by some leading economic indicators, particularly for Germany, is there is some belief that the shift in German defense and fiscal policy will actually help to improve the economic performance, obviously in Germany itself, but because of Germany's importance to other European countries, maybe elsewhere. And it is very interesting to me because I linked to my old life back in my Goldman days when I played a role helping develop a global proprietary leading indicator. I still look at a number of those statistics which are published either weekly or monthly. And most of them are heading gently downwards, but the one exception is the IFO Institute survey of business expectations in Germany. And so at some point, if that's for real, you will start to see that in the performance of some real-time companies, as well as spending numbers in different parts of Europe, I would guess.
Right, Jim. Jim, if I were to take a couple of steps back and maybe zoom out from April to now, everything that's happened with regard to tariffs, how realistic is this? Implementing tariffs without really having a knock-on effect on global as well as US inflation. How realistic is that in your opinion?
Well, first of all, you asked me that question the day after the latest US CPI numbers have unsettled the US bond market. And if you delve into the details, I read an analysis of it just 45 minutes ago. There are the first signs that the tariffs have started to come through import prices into consumer prices. And so I suspect we're about to enter a new phase of how the markets are behaving, because of course, as we go through each day between now and August the 1st, the US is seemingly going to announce deals like the one it claims it's agreed with Indonesia overnight, or it's going to have higher tariffs with countries that it can't reach a deal. The markets, as you imply, have effectively assumed there's going to be no inflation pass-through. The US raises revenues, which the Trump administration is almost boasting about from tariffs, and there won't be negative consequences. But that is very unrealistic. And I think the CPI numbers we've seen yesterday give you the first hint that there is some pass-through. And obviously, if this is the new mood, it's only 24 hours, but that means the higher the tariff announced, the more people will start to worry about that aspect of it, which itself could have consequences for stocks.
Jim, there was some thoughts that Europe can't give too many concessions any which ways because Europe doesn't have anything to give when US talks about or Trump talks about what they are doing. So the question though is this, that if this were to reach any kind of a stalemate position, if you will, does it have a material impact on global growth for the second half of the calendar? And can markets, let's say for example India or select markets which are more inward oriented, shine because of their ability to grow despite global growth pressures?
Yeah. That's the $1 trillion or the 40 trillion rupee question. I don't know is the honest answer because it's so complex, but I think you've got to look at three interrelated parts. The first of which is what's really going on in inflation. We've also had in the UK this morning, coincidentally, a higher than expected inflation print. And it's important to not ignore that in both the US and the UK, so-called core inflation in the very latest month is running quite a bit ahead of target. And so if that persists, you will see bond markets starting to worry again about inflation. So that would not be good for global financial conditions. And obviously for those markets that are most overbought, or especially ones that are involving a lot of leverage, it would probably be a negative. The second thing, which is also bond related, and I'm surprised it's not getting more attention, there continues to be quite a significant deterioration going on in the performance of Japanese bonds. And Japanese investors, of course, have been one of the largest accumulators of foreign assets for a long, long time. And at some point, if Japanese bond yields keep rising, that would have its own negative consequences for elsewhere. The third thing is whether the other issues that are affecting these, including tariffs, but also directly fears of inflation, start to affect real economic numbers. And I think in that regard, it'll be extremely interesting to see the monthly purchasing managers when we get to the start of August for the month of July, because that will give us a flavor as to whether this is really starting to affect the way people spend and companies behave. So if I sort of put all of that together and going right to your question, I think there is something to be said for defensive markets which have some ability to reflect what's going on in their own economies separately from all these global influences could do better. And obviously India stands out, certainly in so-called emerging markets, as a very big, if not the biggest example of that. However, if we get into a situation where there is a whole new sustained rise in global bond yields, it will be very hard for anywhere, including Indian markets, to resist the consequences of that. So there's a lot to play for, and of course, not only have we got those PMIs to look forward to, but it will coincide with the August supposed deadline for the Trump tariffs.
Well noted. We'll leave it at that, but thank you for these answers. They really help, and much appreciate your time.